appropriately and correctly for an extreme 2026. And then we're going to go on to the top 5 stocks to buy non-stop over this period. These are stocks that are great deals because of the recent dip. These are stocks that have huge real proof of concept, and these are stocks that you can feel good about buying slowly over time. I'm going to present the case for each of these, the catalysts, the risks, and the strategies, and I'll let you be the judge. Anyways, timestamps down below, and as always, if you're the one taking the ultimate risk, make sure that you're the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, let's start. So right now we are coming off the worst week since April. The infamous fear gauge very quickly went from extreme greed to extreme fear. Most tech names hit all-time highs on October 28th, and they've gone straight down since then. SPY, which tracks the S&P 500, is down 2.34%. Triple Q is down 4.09%. This is the NASDAQ 100, very tech-heavy index. NVIDIA is down 7.27%. It hit $5 trillion in market cap on October 28th. Since then, it dumped about 7.27%. AMD down 11.65%. Palantir down 15.5%. SoFi, which is supposed to be SoFly, down 14.21%. Microsoft down 8.35%. Meta down 17.4%. Tesla down 8.29%. SoundHound AI down 33.93%. Hood down 14.5%. IREN, a great data center play, down 18.23%. APLD, another great data center play, down 17.96%. And the crazy thing is many of these stocks actually fell this much after reporting blowout earnings. For example, Palantir. Many are arguing this was the best earnings report for any software company ever and was well above expectations, yet the stock, boo. Now, these are pretty brutal sell-offs over a very short time frame, right? But this is nothing new. These are all breathing cycles that are important to happen and actually are very good for the overall trend. A good, lucrative bull market is one that has regular breathing cycles, regular dips, regular periods of time where you push out weak hands that have no conviction in stocks. So what are the walls of worry that we're dealing with right now? For starters, the government shutdown. I mean, flight delays, food stamp freezes, regulatory paralysis, government instability. This is all very bad for sentiment. Data fog, critical economic data is just simply not being released anymore, leaving markets flying blind. If you're thinking about the CPI, the jobs report, retail sales reports, all of this is being delayed because of the government shutdown, and it was already kind of foggy because of how the Trump administration has been reporting these things. And then you have tariff uncertainty. The U.S. Supreme Court has been ping-ponging over U.S.-China tariff rules. You have short sellers that are targeting top-tier AI names. Even names with rock-solid fundamentals are getting piled on by short sellers who are then going on media and fear-mongering everywhere. And then you have valuation concerns. Besides this recent big dump, there was really no real consolidation since April, which means that prices stretched month after month after month. And when you have prices just going straight up, well, people start sounding the alarms on valuation concerns. Now, when you're looking at all these different factors, a few of these are going to be very short term. Polymarket shows that the odds of the government shutdown ending within the next few weeks is increasingly high. Who knows how long this is going to stretch out, but this isn't going to be a permanent headwind. But of these, I would say the stickiest worry is the valuation concern. Yes, some 85% of S&P 500 companies have reported beating on their earnings, but the thing is there's a lot of skeptical capital on the sidelines here, and they don't want to buy in unless there's a big dip. Huge chunk of folks have been sitting on the sidelines since April, and they've said, wait, we're waiting for a much bigger crash. We're not going to get in, and the stocks have gone straight up since then, and they've only become more and more affirmed with their conviction that they need to wait for a dip. These folks are not going to be diving in unless they see a major crash, or at least...
All right, PL. Satellite imagery. $300 million with the German government, partnership with Anthropic, and San Francisco, $5 million. Any connection to the government? That would be good, right? This is a $13 stock. Okay. National Reconnaissance Office. Okay. Planet Labs. If you guys are on YouTube, I can see comments over there. Can respond to them as long as they're normal. They don't have to be normal. All right. This stock will surprise everyone. I'm not a financial advisor, but some people who are might say that buying $50 of this before November 22nd is a good idea based on the research I've done. The company is Planet Labs PL. They have a nearly $300 million contract with the German government to provide geospatial images of the Earth from the sky. And they have an undisclosed contract amount with the US government for national security. So they are able to diversify, selling their images to multiple countries. They also are in a very large growing market, given SpaceX has proven that you can be a space company valued in the high hundreds of billions. The ticker is PL Planet Labs, and let's jump into a little info about why now is the time to buy. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is a little breakdown on their contract. This is the program. Daily satellite imagery data is pretty impressive. They've also got this. This is about 300 million, a little under, for satellite image AI-enabled intelligence with the German government. So they're kind of helping. They're like a Palantir for space. That would be the bull case. Of course, they're just a $1 billion company. They're not super advanced yet, but this is definitely positive. And then if we look into a little bit about similar tickers, well, Rocket Lab is a very important comparison to make. So this is PL right now. The reason why it's interesting right now is there's a little pause, well, a long pause actually, before mid-December earnings. That's crazy. Let's see when their earnings dates are. There's no way the Q3 earnings are coming up in mid-December, right? I mean, NVIDIA generally marks the end of the earnings season, so check in on that. But looking at Rocket Lab, this is Rocket Lab, and the moves it makes are pretty large, 50% in maybe 10 days. Big move back here as well. This company is choppy and speculative, so of course has faded off, but PL in that same sector has a similar likelihood of a move. So birds of a feather fly together, and Rocket Lab just coming out with earnings this afternoon. Seeing how this closes tomorrow could be a good sign if it's a strong close for PL. So we'll see. There's a good opportunity with PL. We can see it on the daily chart here. There's a downwards channel, recently broke that channel, a little bit of a change of character to the upside. And we'll see how this opens tomorrow, but pretty easy spot to risk off of somewhere in this 13 and change level, going back to this big distribution day where there was a lot of selling. And so there's a lot of people spread out among that candle. So that's PL. Now, here's that earnings date, December 8th. So that is really when it is. It's super late. I don't know why this little company has earnings in December, but they do. So as far as their money-making capabilities, well, it's not awesome. This is 2025, of course. The revenue was up 20% year over year, 70 million. And they did have about 5 million of EBITDA, so actual money in their, corporate account. And this is a big backlog. $700 million is a lot. So that's a lot of new contracts, 500% year-over-year growth. You could say backlog is really suspect, but at the same time, a lot of these AI data center companies are reporting big backlogs, and those stocks are going up as well. So as public market investors, we have to follow the price of the stock and not, having to make a bet on how much of this backlog is actually going to become an actual contract. So these are not huge awards with the U.S. government. Again, I mentioned the national security one is undisclosed, but this tenant change award for the geospatial agency contract for basically navigating ships with the help of satellite images. That's not nothing. That's a recent award, but it's not the 300 million with the German government. So they're an unprofitable company. They're a startup. We know this. They're in aerospace and defense and space broadly. And the best connection has to be with Rocket Lab, which looks like this. So there is a way to play SpaceX. DXYZ contains SpaceX. This company has gone on a crazy run. It was, this is after a reverse split, but this was a completely speculative market manipulation, allegedly, type move, similar price action to that anyway. Even just recently, a year ago, this run was crazy. So I can't really look at this as some way to gain insight on what PL is going to do. For some reason, it doesn't like to use the 24-hour chart for PL, which is fine. You can look at one day, and then we can look at over hours gappy action. If you're super in the weeds here and you see this chart and this doesn't freak you out, well, if this gaps down a little, this level could be a good way to play off of. So you risk 20 cents, look for a 10% move up or so, and that's the idea. So PL. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I just posted that for subscribers. And if you want to join stockscommunity.com to get one-on-one help, head over to that URL. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, so that's PL. Planet Labs.
Least a sizable market dip that gets bought up. There's this famous meme where stocks are going straight up for like 6 months and then they dip 5% and suddenly everyone's like, bro, what's happening? Why is the market dropping so much? Well, you have to remember, folks, that this is a very important part of the process. You need breathing in order to have a sustainable bull market. Something that gaps straight up is going to end up gapping straight down. Something that goes up in a stair-step pattern, that's a lot more sustainable. And the more stair steps, the more dips that get bought up, the more conviction is built throughout the market. which inevitably actually over the long run creates massive bubbles. But when you're in a cycle where everybody's questioning everything, that means that you're still climbing that wall of worry, right? The more people fearmonger about bubbles, valuations, and prices going up too fast, the more opportunities you have for these catalysts to cause massive dumps in price, where people that have no understanding of things they're holding go run for the hills. And you have these price checks, and then once dips get bought up, well, assets that are actually worth buying get reaffirmed. Now, this is definitely true in individual bull markets, but it's also true if you look at the 100-year history of the market. The reason that markets do inevitably find buyers at even the biggest crashes is because people do have faith in the long-term picture, because they understand how the financial system works. And they understand that at the end of the day, companies innovate, government prints more and more money, and the Fed stimulates. And people with assets long-term win. So can anyone say if this pullback or a different pullback that you're going to be experiencing is going to be the big one? No, of course not. But here's what I can tell you. Any pullback is a massive opportunity. And when you're looking back at this time in 6 months, in 12 months, in a couple of years, you're going to wish that you made the right moves. Why? Well, because there's a ton of reasons to be optimistic for 2026. It's setting up to be the most extreme market we've seen ever. Reasons to be optimistic for 2026. AI CapEx commitments. Hyperscalers and governments have committed $1 trillion plus in spend. Some numbers are many multitudes of this, and numbers dating out to 2030 are many, many multitudes of this. You have more rate cuts incoming. Easing cycle is going to continue through early 2026 and beyond. And then President Trump gets to pick his new Fed leader in May. And this is going to be a major shift from Powell's slowly easing tone to Trump's wanting to stimulate tone. He's going to pick somebody that's going to stimulate the market like crazy. And then you've got the midterm cycle liquidity boost. Election year dynamics tend to favor credit easing. I think Trump is going to be even more aggressive with this, because that's kind of how he plays everything. And he's been very, very vocal that he wants a Fed appointee that is going to cut rates substantially. And if there's any kind of weakness in the market, you better bet he's going to go even crazier on that. Now, historically, if you look at any period of time where the Fed has cut rates, I mean, multiples expand. Multiples tend to expand very, very aggressively as rates get cut and liquidity increases. People are simply willing to pay way more for the same earnings/revenue. So even if revenue doesn't go up, which of course it will go up because rates are going to be cut and more money is going to be flowing everywhere. But even if revenue doesn't go up overall, just the fact that rates are getting cut means that you're...
All right, let's jump into a little breakdown here on First Solar. Missed consensus estimate, revenue beat estimates. Guidance is relatively the same. Okay. They have announced a new manufacturing facility with 4 gigawatts of capacity. Okay. So what we want to know is any connection to Stargate or Open AI or FSLR. That's what we want to know. Indirectly. Okay. Okay. Let's talk about First Solar. Trump's energy stocks will help you retire. This company, First Solar, ticker symbol FSLR, just built out 4 gigawatts of solar capacity. So that new facility is going to be able to serve almost half of what OpenAI requires as they ramp up users over 1 billion monthly users. Absolutely crazy. There's no confirmed connection between OpenAI's data center and therefore power needs and First Solar. However, OpenAI is helped by the $500 billion Stargate project invested in by SoftBank, and with the government's permitting as part of that Stargate initiative, it's going to be easier for companies like First Solar to get these multi-gigawatt projects built and to be ready and waiting when these massive LLM companies like OpenAI and Anthropic need to get power. Ticker is FSLR. Let's jump into a little breakdown. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is some info about Stargate, first off. It's $500 billion project. That is not a typo. First Solar is not named in the project. However, solar is a super clean way to get energy. Big tech wants to align themselves with clean energy. They already have a bit of a PR crisis with AI data centers making people's electricity cost more in certain states. Not to mention Amazon cutting off 30,000 people recently. At some point, this whole AI doesn't take people's jobs thing is going to not at all sound true. So there's going to be a lot more energy needed, and it never hurts that it's green energy that's being built out by this company, First Solar. Not that everyone cares that the energy is green energy, but in sort of a interesting way, the jobs that may be taken by ChatGPT and Anthropic are a lot of people who actually do care about green energy, more of the white collar jobs. So this is the most recent earnings from First Solar. They had pretty much matched earnings per share. Revenue pretty much matched as well. And then guidance was very similar as well. So kind of met expectations, and the chart is solid. So earnings reaction is solid. There's a clear level to risk off of. It's not some, blow away earnings, and not any sort of, big move like Carpenter, for example, which is a steel alloy company. Something to that effect. They're already up a lot. From 250 to 300 plus is a crazy move in just a couple of weeks. These guys work with Alcoa, the big steel producer. So this is not that, right? This is a relatively small move so far, 15%. But that's good because it offers a chance to get in. Previously, this stock was not super easy to get into. Sort of just channeling, just grinding up. Maybe there were some opportunities, but not super easy, right? Over this sort of flag was visible, but when you zoom out, it's tough to get in something that goes up, 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 up. There's no easy way to risk a certain level. So now you're getting a level right over this 268 just about is very clear. Risk a few bucks and look for $10-20 up. So that's the technical opportunity. And then here's the deal. This is a lot of money, over $1 billion in sales. And this is a lot of power, almost 4 gigawatts annual capacity, expected to ramp up through 18 months from now, according to Reuters. So they're very well positioned. They're obviously US based. That facility is going to be in the US. And the guidance is okay compared to previous mentions, but it doesn't seem to be affecting the earnings. And despite, if you look at the earnings per share, and exactly, it's down a little bit, right? But the reaction tells the story. And as previously mentioned, there are times, this is the Microsoft earnings per share, it's a beat, right? The earnings per share is higher, but look at the reaction, right? So there can be sell the news, there can be, CapEx, there can be all type of storylines that make a earnings reaction not good, even when the earnings itself is good. So reaction's good, the level's good. And here's the crazy number. I thought it was 20 gigawatts initially, but I guess Sam Altman said 10 gigawatts is what needs to be built out for OpenAI, that they can actually somehow pay for. And this is a serious target. This is a huge target, 250 gigawatts by 2033. So more than 20 times that initial build out. That's why you start getting into needing $1 trillion of funding. Absolutely wild. So this sort of leads the question, could First Solar provide this? And the question is, could solar be enough to provide it anyway? And yes, they could, but you need batteries, you need the whole ecosystem. So they're a piece. If you like this idea, hit that like. If you want more, hit that subscribe. And if you want help, go to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
We're going to see a big multiple expansion in my view. Now, President Trump wants to send $2,000 tariff checks, which are basically stimulus checks, out to the people. He said that this morning. This will cause even more melting up, and whether or not he actually does this, it's pretty clear that the president is more than willing to do any kind of stimulus, throw money around to make sure that the economy is looking good before midterms. And then you've got $6 trillion plus of sideline cash sitting in T-bills, T-notes, T-bonds at the Treasury, waiting to buy up any dip worth buying. Not all of this is going to go into the market, but as you lower rates more and more, and as liquidity expands, well, a lot of people are going to realize, okay, my dollars are going to be eroded faster than the interest that I get on them, so I need to put them somewhere. Now, do I think it makes a lot of sense to dramatically cut rates, really loosen liquidity, throw tons and tons of money around at the same time where we have assets at all-time highs? Probably not. It would be much better to just stimulate slowly. If you look at the last few decades of doing this, what happens? Well, you get even crazier asset bubbles each time you do this type of policy, and you tend to destroy the USD further, making people that own shares in companies richer and richer, and the average person poor and poor. I personally don't think that's a good thing for a country. However, as an individual, if you're looking to protect yourself and position correctly, well, you got to look at these trends, and you have to understand that positioning yourself into the right assets is going to be the way to go. Now, along those lines, what are the top 5 stocks that I see value in right now at current pricing that I believe are going to be good assets for this coming condition? None of these stocks are fugazi stocks that are dot-com bubble bust types of stocks. These are stocks that have real massive revenue growth, real massive margin growth, real massive scalability, real competitive advantages, and are real deals down from all-time highs. Okay, number 5, Duolingo. DUOL. Duolingo is the biggest and most popular language learning app in the world. Stats show Duolingo commands around 60% of all language learning app usage in its category. And the online language learning market is expected to continue to grow pretty damn fast. And when it comes to future AI implementation, Duolingo has a huge user base generating large amounts of data on how people learn and how people learn languages. And that supports better personalization, adaptive learning algorithms, and content optimization, which can really really set them apart long term. In any field, those who have the most data are going to be the ones that have the best AI, because AI uses all of that data to train. Now, Duolingo just did something very, very interesting, which has actually completely destroyed their stock, but I believe is going to set it up for massive growth long term. They essentially just reported a great quarter this week and explained that they've decided to aggressively put user growth.
Okay. Oh dear. Duolingo. NVIDIA is a partner. How is NVIDIA a partner to Hive? Oh dear, this is dense. Stuff about stuff. We'll just skip that. They have a partnership with Bell Canada. They're in $66 million of GPUs from NVIDIA. Okay. Canada, Sweden, and Iceland. Okay. Cool. This stock can change early buyers' lives. This is not financial advice, but my research suggests one might buy every share you can. So the ticker is Hive Blockchain. HIVE is the ticker symbol. Notably, blockchain was their old business. Now they're trying to get into AI, hyperscaler, load, compute, provision, buzzword. Instead of mining Bitcoin, they're going to run LLM compute, and that's supposed to be higher margin for sure. And they have a partnership with Bell Canada, which is a telecom provider, Bell of Bell Labs. They're located in Canada, also in Sweden and Iceland, and they have a contract to buy over 60 million of NVIDIA GPUs. So let's see if this transition is realistic, and let's look at why now is the time to buy, in my opinion, HIVE.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is Hive. They're a $1 billion company. Okay, they're a public unicorn, and they've got a little bit of institutional ownership, not a lot. So they don't need much cash. They definitely might raise some cash, and we can see when they've most recently raised cash and how they've done that right here, which is 20 million as of a couple months ago, with some mid-tier, startup-ish friendly investment banks around $3. So this is the raise, a big move during September. Well, actually, that's the end of September. It didn't really move during September much. And coming back to this rising moving average, looking like maybe a little undercut here and a relevant level to buy Hive. If we look at similar tickers, I mean, this move is crazy, right? $2 to $8. Mara, similar, selling off. These speculative names all selling off. Former Bitcoin miners turned compute providers. Are they all going to bounce? I don't know. I don't love these earnings reactions. whereas those had earnings, Hive doesn't. So that's a pretty silly thing to say, but we can look at the earnings. This level looks interesting, and this moving average looks interesting as well. So let's take a look, actually. What were Hive recent earnings, and when are next earnings, right? Probably they don't make much money, right? They are a $1 billion literally market cap. So this is their net cash per share. I don't know exactly how that compares or if that's a useful metric, but we can take a look. Compared to Mara, it looks like that is way lower, okay? So I don't know if that's the best metric. If we look just at basically how much they're spending, that could be a better way to look at it. I think what's really challenging here is the financial results don't appear to be super detailed, right? Here we get how long they're going to last based on how much cash they're burning. This is for Mara. And for this one, we don't. So this is a fair amount of EBITDA, 50 million, basically, profit for all intents, for our purposes, for my purposes. That's what I think it is. And over 100 million of revenue. This is a big deal. Revenue from their serving, Meta, Amazon, the high performance computing, maybe Cores Scientific, ticker symbol CRZ, maybe CoreWeave, CRWV, ticker symbol as well, in that high performance computing category, maybe Oracle. We can take a look at that, but that's up to 10 million. So that is growing. And what I want to do is not focus too much on the old Bitcoin mining info. I think that's kind of the old business. Looks like they have results that are coming out in just a few days. So this is what I was looking for. If that's to happen, you want to maybe be not getting in with a big position here, right? Because we just saw how these reactions went. So this one is not on the actual Schwab Thinkorswim chart, but right here, there's going to be financial results for this company. And you don't want a big position in case that sells off. So I'm not saying to wait to buy it, but I'm just saying if you do get in now, definitely don't hold much into that earnings. It's at a favorable spot right now, but that's how I would play it. I do want to compare these different companies because they're all trying to do the same thing, right? Basically, they were all built with the intention of mining Bitcoin. And this company, Hive, they're buying, this is kind of a small data center in Toronto, but it's not nothing, right? If a gigawatt is 1,000 megawatts, this is not that much. And then they are converting a facility as well. So that's checks out as to the Bitcoin to AI conversion. This is part of the 60 million NVIDIA purchase, it sounds like. And they are going to keep making money from the Bitcoin mining business. So it sounds like they're doing everything that needs to be done. Hydropower is another way to get energy. There's companies are getting creative with finding energy. So seems to be all checking out. Interesting that they're in Canada and Sweden. And if you like this idea, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want the best stock of the day, head over to stockscommunity.com. You can hop in the Discord Try that for $25 for 7 days. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Above short-term monetization. They're focusing on the user, the customer. Now, a lot of people say, why would you focus on the user? Money always first. Well, if you invest your efforts and money into focusing on the customer long term, they're going to be way happier and they're going to make you way more money. Wall Street and hedge funds want these companies to be gutting themselves in order to completely get as much short-term cash as possible now. However, that doesn't make sense over the long term, and that's a very, very flawed strategy. And it's creating a massive value arbitrage here. Wall Street has decided to punish it with a 67% dump from just this past summer's high. Now, here's the thing about Duolingo. Despite bears claiming the stock should go bankrupt, it's a free cash flow machine. Every quarter since Q1 of 2022, it's printed more and more free cash flow while growing its user base substantially. If you look at Q3 numbers and compare it to Q3 of 2024, it's insane how much they've improved just year over year. Daily active users is up 36%. Monthly active users is up 20%. Paid subscribers is up 34%. Paid subscribers penetration is up to 9%. Essentially, the amount of long-term monthly active users they convert to paid subscribers, that's up to 9%. But remember, this company makes money through ads and paid subs, so they get paid either way. Revenue is up 41% year over year. Total bookings is up 33%. Net income is up more than 10x. And adjusted EBITDA is up from 47.5 million to 80 million. So despite all these record numbers, the stock has absolutely been destroyed. Bears are expecting this stock to go to zero. I think this is ridiculous, and I think there's a big arbitrage opportunity here. Number one, Duolingo Max expansion, which is their AI-powered tier. Duolingo's premium Max tier uses GPT-4 to simulate human-like tutors through features such as Explain My Answer and Roleplay, and as AI models get cheaper and more capable, Duolingo can scale personalized tutoring globally, creating a true AI teacher at scale. I think it's a ways out to do this, but I think this is a big catalyst for them. Wider rollouts mean higher conversion rates from free membership tiers, and that means more paid users, right? Number two, hyper-powered learning loops. With billions of lessons completed, Duolingo's dataset trains its own adaptive AI models that tailor difficulty, pacing, and vocabulary to each learner.
Okay.
The result, faster progress, higher.
Let's talk about Meta here. This one stock can change early buyers' lives. This is not financial advice, but my research suggests it's a good idea to buy as much as possible before November 22nd. The company is a large company. It's Meta, and it's still early because they just got hit with a $15 billion income tax based on new legislation. So that hurt the earnings. The reaction was also pretty bad because they're spending so much on AI, both the actual GPUs and also the researchers who they're hiring from all of the other companies, including OpenAI. So all of that spend is scary for investors. The stock's down significantly, and it looks like there's an opportunity right now to get in before it starts to move up. Not financial advice, but I hope this helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here are the earnings for all the Mag 7. They've all reported. Apple, actually a little under 100 billion. Google crossed 100 billion for the first time. Nvidia is the end of earnings season for the big dogs, November 19th. Amazon just reported last week. Well, actually, that was now 2 weeks ago. And Tesla as well. So here are the reactions, right? Meta, this is the opportunity to buy. This gap down is pretty gnarly. On a 24-hour chart, you can see what it looked like. Pretty quick moves down. And it looks like it's bottoming. It's down a lot. And maybe you could say there's some sort of level going on here. But even if you just look here, it looks like some bottoming action. Could go lower, but there's an opportunity to buy with a quick risk level where it doesn't look as steep as it used to. So that's as far as what it just looks like. And this is actually what happened here. So this is the hit. A lot of AI hiring. They projected higher expenses. There's always been talk of a lot of bots clicking meta ads. People keep paying for the ads, so they must be selling stuff to these bots if it's all bots. Jokes, right? Meta reported revenue of $50 billion, up 25% year over year. So about half of Google and Apple. I think, if we look at the market caps for these companies, Meta market cap is 1.85 trillion, whereas Apple 3.82 trillion, Google 3 trillion, Amazon, I'm just going to do all of them now here, 2.3 trillion, Tesla, this is the Mag 7, 1.44 trillion, so below Meta, and Microsoft 3.85 trillion. So Nvidia, of course, the largest, near that 5 trillion number. So here's the deal. The growth story is AI for them, but unfortunately, this tax hit really made this earnings per share bad, right? $1 versus $6. And as we saw with other earnings reactions, Amazon earnings per share was higher. Big move up. 20% increase in cloud. Tesla earnings per share did beat slightly. Took a second, but they're up. Apple, kind of a sell-off, but earnings share still beat, and they're holding. And if we look at Microsoft, this is the only story where it doesn't really make sense. They released info about their OpenAI deal, little more earnings per share, but that beat still was a sell-off reaction. So Meta, this tax hit definitely showed, and they've also got a little bit of an operating margin decrease. So they're spending a bunch not only on GPUs, infrastructure, but they also have been giving out these $100 million pay packages to AI researchers. And they're expected to spend $70 billion this year, which is a crazy amount for, this is the smallest of the Mag 7, except for Tesla. Tesla's not, but we can check, but I don't think Tesla, well, XAI is not even part of Tesla, although they are sometimes sharing the same infrastructure. 70 billion is a crazy amount, so we don't even have to really look at this. But this is the kind of money they're spending on XAI, right? Maybe 5 billion of debt, 5 billion of equity. So it's just not at all on the same scale. Sorry for hitting the microphone there. But what happened here is Meta tried to catch up in AI. They open sourced all their models. They really are caught up. It's just that it appears they're a little over their skis. Currently, they've done that before with the metaverse sort of initiative. And just like that was a huge run after that metaverse thing reversed, this could be a buy the dip opportunity as well. So if you like this idea, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want help on your portfolio, head over to stockscommunity.com for $25 for 7 days.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay.
Higher retention, better lifetime value. I'm betting that AI-driven engagement is going to actually boost daily active users and margins long-term a lot. And then, of course, you have AI-generated content. AI can now auto-generate new exercises, sentences, and storylines, cutting content creation costs and increasing language coverage substantially. This is going to reduce dependency on human linguists, expand languages faster, and improve scalability. This means margin expansion and rapid course development. Now, the big thing here, and I can't stress this enough, is the ability for Duolingo to use AI to create a cross-skill platform expansion into math, music, and more. Duolingo's AI infrastructure, it's not limited to language, it's a universal learning engine, and it can use all of the data that it's used from language to apply learning methods to many other subjects. New apps like Duolingo Math and Duolingo Music are leveraging the same AI framework, expanding total addressable market quite substantially. And diversification beyond languages is going to multiply new verticals of monetization and dramatically increase the total TAM, total addressable market. So anyways, I think there's a lot of opportunity here, and this is what we told Discord members. DUOL is the most oversold we've seen all year on the relative strength index. Meanwhile, the company just reported a blowout earnings and an aggressive change of strategy to prioritize long-term user generation over short-term monetization. Okay, number 4 is Supermicro SMCI. So Supermicro builds the powerful servers and hardware that run AI and cloud systems. Its specialty is making energy-efficient, customizable machines that companies like NVIDIA and AMD use to quickly build out new data centers. So what makes them different from the competition? Well, instead of just using fans and air, SMCI actually designs systems where liquid flows through special pipes or plates to pull heat away from powerful chips like NVIDIA's H100s. This helps data centers run faster, use less energy, and fit more AI computing power into the same space, making liquid cooling one of SMCI's key growth areas and what it's really known for. Now, how big exactly is the data center liquid cooling market? Well, research shows that the industry for this is expected to grow very substantially into 2030 at a 21.6% CAGR. And this company is a juggernaut in the space. It's a leader. Yet the stock is on a big, massive dip right now. After an earnings that wasn't bad at all, was actually showing progress in their promises. If you look at the headlines, earnings surpassed expectations, but they say revenues declined slightly. And so what are bears doing and short sellers? They're rushing to scare people out of the stock. The problem, well, this fear is very, very...
All right, let's jump into a little breakdown on Soxal here. So that's Soxal. AMD, Broadcom, NVIDIA, Mu. So AMD, Broadcom, NVIDIA, Mu. Pretty interesting. $31 semiconductor stocks, so a lot of them. Claude is weird for financial analysis. for their tone. This is what we want. Okay. AMD and Broadcom. Okay. Is TSMC in Soxham? Okay. This one stock is about to skyrocket. Recently, China and the US met in South Korea, and the agreement was that Trump would lower import tariffs and China would roll back retaliatory tariffs. NVIDIA is still not allowed to sell their popular chip into the Chinese market. NVIDIA's argument is that they should be able to, and not being able to sell it makes China develop more of their own technology. NVIDIA is a little bit biased here. They want China. It's a huge market. Even without China, NVIDIA is holding near all-time highs. They're down recently after about a couple week sell-off in the broader market as a whole after these South Korean talks. And now is the time to buy an ETF. The ticker is SOXL. It is the semiconductor bullish ETF that includes NVIDIA as a big part of it. Also AMD and Broadcom as high-weighted holdings. The ticker, SOXL, looks great. You don't have to have concentration in NVIDIA. You can take a piece of all of these semi-stocks, which are all moving based on largely these China and US tensions, which appear to be good right now. Let's jump into how those China-US tensions played out in the market as a whole and how this semi-ETF is poised to benefit right now. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So TSM is in Soxham as well as AMD, Broadcom, and NVIDIA. And there was recent talk of trying to make sure that TSM doesn't export to China. Makes sense for the US. This is Micron. It's also in Soxham, going straight up. So probably don't want to buy this right now, but certainly has helped lead to Soxhal's strength as a whole, which does help. You don't want to buy stocks when they're super weak. Like NVIDIA, big rebound. I don't know that you can buy it right now. It's kind of in no man's land. It hasn't consolidated. It's not a bounce off a moving average. However, down here, you couldn't really buy it either because you didn't know it was going to bounce all the way down here. And this was scary at the time on the 7th. If we look at the SPY, this was this move. And, you know, that's really far down, all the way back to the first Trump-China talk. So China says, hey, we're going to not allow rare earths companies to export without our approval. The approval part was a sort of later clarification, or came out a little bit later that was the initial plan, and certainly rocked the market. Everyone got liquidated on Bitcoin and Ethereum, and the market went down as with that, of course. So when that clarification came out, we started to bounce. We gradually chopped, but reclaimed that. This is the October 30th South Korea talks, Trump and Xi over there. Meanwhile, NVIDIA's in Washington. Jensen's in Washington for their conference. And those talks went well, but given this big move up since the first big drop, some sell-off was not surprising. Of course, it's easy to analyze the macro, tell you what happened. I'm not going to tell you what's going to happen, but we're recovering here. So the reason I'm not talking about buying the market as a whole is it's easier to pick what's going to happen to a segment of the market. And semis look good. There's a level here that is buyable. Sure, you could say, well, that level is here as well with the market. And it's like true. A lot of these companies make up the market. However, what you want is to pick an ETF that contains a lot of companies that you want to own. First of all, AMD, the reaction to earnings was not great, but it's holding this level as well. So interesting to buy, but tough to buy given that rough earnings reaction. NVIDIA, I just talked about how now it's kind of in no man's land. Mew just talked about how, yeah, it looks strong, but you can't buy it up here. But what happens is when you roll all of these companies up into Soxhole, suddenly you get an opportunity to buy where you can risk a level. And I believe this thing rebalances every day. Meaning, I believe that all of these ETFs that are in it, the price of them composes this price, and that is the rebalancing. Someone can comment to correct me, but the percentage of those that goes into these slightly changes each day. So I don't have to worry about exactly what that does, but I do know that the chart looks relatively clean here. So as we just talked about how those other charts look difficult, this one looks simpler because these days are small. So you can risk a small move down and look for a big move up. And you just can't do that on those other charts. And people are trading just Soxhole. It's not like this is just some combination of all of them that we're doing astrology on. No, people are actually seeing this level and buying just this ticker. This ticker is sort of famous in the swing trading community for a certain Swedish trader who always likes to buy Soxhole. So semis have the tailwind of AI. We talked a lot about those are the big dogs and where they're at right now and why Soxhole is a better buy than those individually. So that's the idea. SOXL. If you like these ideas, hit that like button. If you want more ideas and you want a free course on how to buy stocks before they go up, hit subscribe. And if you want one-on-one help, head over to stockscommunity.com. You can try for $25 for 7 days. Give it a shot. There's some awesome testimonials there.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Alrighty. What else we got cooking here? IBM.
unjustified because all of this has been expected. For starters, the revenue was delayed. It wasn't lost. SMCI's reported revenue drop wasn't because of weak demand. It was due to customer requested configuration changes on new AI server orders. That means those sales simply shifted onward. They weren't canceled, and the order book remains very, very strong. So next quarter's revenue should bounce. And I think you're going to see a Q1 and Q2 specifically for SMCI that look very, very strong. Number two, huge backlog overall shows undeniable strong demand. Despite the short-term dip, SMCI's backlog jumped to $13 billion, driven largely by new NVIDIA AI chip orders. That's a massive pipeline of business that will flow into upcoming quarters, in my view. They also raised full-year guidance. Instead of cutting expectations, SMCI...
All right, let's seal the deal here. IBM, slower growth in the cloud software business, but infrastructure and AI growth is a big deal. So, big reversal. Don't fail me now, ChatGPT. We got to break this record. Here we go. Hardware margins declining, changing, switching up. Talked about IBM on the 8th, which is right here. Still interesting, so. There is one stock that is about to skyrocket. This company was the company you couldn't get fired for buying. The ticker is IBM, former blue chip leader. With this most recent earnings, the reaction was solid. The earnings were mixed, but there's a lot of interest despite the cloud services revenue not being super impressive compared to, say, Amazon, with Amazon Web Services getting 20-30% growth year over year. IBM not quite as strong there, but there's a lot of focus on their turnaround story from hardware in the 90s to very recently, which is what this video is all about, this earnings, this next 1 month investing opportunity, where they had more revenue in AI projects. So if they can become the on-prem secure AI solution, that is a massive, massive market. Let's jump into a little bit about IBM as of the last month or two, what these earnings reactions look like in other Mag 7 stocks. IBM isn't Mag 7, but maybe it could become one. And this is not financial advice, but the chart looks great.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is the original Watson AI stock, the IBM that was doing legacy hardware into now AI. And this is the number, okay? Almost 8 billion in generative AI. Again, I've mentioned this a couple of days ago about IBM, but the generative is really not super awe-inspiring or, anxiety reducing. Like, we'd love that AI to not be sort of researchy and fluffy, but it could be that they're just going with the times, which is to say, in buzzword fashion, generative AI is where the money is right now. So if that's what people want, fine. They do serve the real industries, right? Government, hospitals, big banks, service level agreements, data governance, on-premise servers, serious security, and they're still the leader for that. So who knows exactly if that's going to hold up. but that 8 billion is a big deal. And the more that they get associated with AI, the more this stock is going to be an interesting opportunity. So let's take a look at what these earnings actually were before we jump into essentially the comparison with other companies. And more importantly than the 10% year over year growth of the revenue is this AI number around 8 billion to 10 billion, whatever it is. This is literally the words out of their press release. Book of business is what they called it. So, I don't think an accountant would love that, but that's what they called it. Maybe an accountant did come up with that. Probably. It's pretty hand wavy. This is the sort of reaction that's a little crazy. Earnings per share beat, right? Sold off, recovered, kind of like Tesla's earnings, and then massive day and then holding up here. So talked about this a couple of days ago as being an interesting buy over this level, and continues to hold that level. It still looks super interesting. This is the dividend today. So super, super attractive risk reward wise. And what that means is if you buy on a day like, I don't know, somewhere in here on the 4th, maybe you get a favorable spot, but it's also kind of volatile within the last couple of days. Whereas here, you can look right here and you can say, hey, I'm going to buy this, whether you buy before work, whether you're after work, in your lunch break, you work and you're in front of your computer anyway. 9:30, you buy it. You can risk yesterday's low of 304, risk a few bucks, literally $3-4, and look for a move up of whatever it is, 5-10%, and a breakout. So that's the idea here. Pretty awesome strength and volume there. And you want to hold over that volume. Where there's volume, there's a lot of people that bought there. Shares were exchanged, which means if it gets above that level, those people are making money, which is good. Right? So here's the deal. They still have to make it clear that this AI growth is sustainable. They have this number, right? But it's unclear if this is going to continue into recurring revenue. A lot of these enterprises are being told from executives, hey, you got to spend some money on AI or we're going to look stupid, right? And if next year it comes out that, hey, you guys spent all this money on AI that we told you to spend, how are we doing? Is it helping? And everyone's like, we don't know. And they might stop spending. So this is kind of a spending cycle for enterprise contracts. And so that, 7, 8, 10 billion is great. But the real question is, will it hold up into high margin contracts and recurring revenue? So the turnaround story is real. There's no question about that. This is also arguably the leader in quantum, interestingly, given the massive moves in quantum companies. IBM participated in some of that in September, but nothing compared to the moves in the RGTIs, the IonQs, the QBTSs, the QUBTs, whatever that quantum security company is called, LAES. Actually, that one broke down. So forget all those. I think IBM's the better buy right now. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. I think we locked in that new record. 1 minute,